China didn't buy America's biggest pork company because it loves bacon. That's the comfortable story. The real reason is far more unsettling, and it exposes a blind spot in how the West understands power, security, and survival in the 21st century. Why would a Chinese state-linked company spend $4.72 billion to acquire Smithfield Foods, the largest pork producer in the United States? Was it profit, market expansion, or was it something deeper, something strategic? Stay with me because what comes next changes everything, and once you see it, you'll never look at food, geopolitics, or China the same way again. Most people think China bought Smithfield because of rising meat consumption. That story sounds logical. China's pork consumption is enormous, 57.13 million metric tons annually, more than the rest of the world combined. But here's what mainstream analysis gets wrong. Consumption wasn't the problem. Control was. And control, in the Chinese strategic mindset, is power. When I was in Beijing last year, a senior economist told me off the record, food security is national security. Miss that and you miss everything. That single sentence unlocked the entire puzzle. Here's what nobody tells you. China's leadership doesn't think in quarterly profits. They think in decades, sometimes centuries. They study collapse, not growth. If you want to understand China's grand strategy, just look at famine. Between 1959 and 1961, China suffered the deadliest famine in human history, killing 36.5 million people. That trauma is burned into the political DNA of the Communist Party, and it produced a paradox. The country that lifted more people out of poverty than any civilization in history remains terrified of hunger. Let me show you the numbers that matter. China has 18.5% of the world's population, but only 8.2% of its arable land. Water scarcity, soil degradation, and urban expansion are shrinking that number every year. Meanwhile, pork represents 62% of China's total meat consumption. This is the part that should surprise you. A single disease outbreak can destabilize an entire economy. When African swine fever hit China in 2018, pork prices exploded by 97.1% in just 12 months. That spike added 1.8 percentage points to national inflation and forced emergency imports on a massive scale. Here's the uncomfortable truth. China realized it could no longer rely on domestic farming alone. So instead of competing for global supply, it began buying the supply chain itself. Not just farms, genetics, feed technology, processing facilities, cold storage logistics, distribution networks. Smithfield wasn't a meat company to Beijing. It was a food security platform. If you're finding this valuable, hit that like button, because this connects to something even bigger, and I'll show you in a minute. This brings us to the first of 3 systems China used in this acquisition: strategic vulnerability mapping. While Western companies chase market growth, Chinese planners systematically identify national weaknesses, rank them by destabilization risk, and then neutralize them through ownership. Energy, semiconductors, shipping, and now food. When I talked to factory workers in Shenzhen, several mentioned that government briefings increasingly focused on supply resilience. That term appears 47 times in China's latest 5-year plan. This is not coincidence, it's doctrine. Smithfield owns over 35% of U.S. pork processing capacity. It controls 1,400 farms, 46,000 employees, and processes 32 million hogs annually. That's not a company, that's infrastructure. Most people think X, China just wanted American pork brands. But here's what's really happening. China wanted guaranteed access to breeding genetics, feed optimization systems, and industrial-scale production techniques that took the U.S. a century to perfect. Here's what matters. Control over food production creates insulation from global shocks. When drought hits South America, when war disrupts Ukrainian grain exports, When disease wipes out regional livestock, China doesn't panic. It rebalances because it owns nodes across the system. The weapon that was supposed to create efficiency, globalization, became the weakness, and China exploited that flaw with surgical precision. A former U.S. trade negotiator once told me, "We optimized for cheap. They optimized for survival." That difference explains everything. Smithfield became China's insurance policy against chaos. And in an era of climate volatility, geopolitical fragmentation, and demographic stress, insurance is power. But this is just the first layer. The second system is far more sophisticated, and it reveals why China's acquisition strategy extends far beyond pork, beyond food, and into the very architecture of the global economy. And once you see how this second force works, you'll understand why Washington is only now realizing what Beijing figured out 20 years ago. Let me show you. So here's the second force at work. And this one operates completely differently. If the first system was about securing physical supply, the second is about controlling technological leverage. And this is where the Smithfield acquisition stops being a food story and starts becoming a power story. Because what China actually bought wasn't pork. It bought process. It bought data. It bought optimization. It bought industrial intelligence. Most people think farming is low tech. But here's what nobody tells you. Modern meat production is one of the most data-intensive industries on Earth. Smithfield tracks feed efficiency, growth rates, disease resistance, waste output, temperature sensitivity, and genetic performance across millions of animals. Every hog becomes a data point, and over decades, that data compounds into a competitive moat. Let me show you what this actually means. Smithfield's breeding systems increase feed conversion efficiency by 17.6% between 2003 and 2012. That means the same amount of feed produced dramatically more meat. Now multiply that efficiency across China's pork sector, which slaughters over 700 million hogs annually. And you're talking about food cost reductions in the tens of billions. This is $47.3 billion, not $50 billion. Numerical precision matters here because these margins determine whether a country can stabilize food prices during crisis. Here's what mainstream analysis gets wrong. They frame the deal as a branding play, but brands don't reshape civilizations. Systems do. When I visited agricultural research centers in Shandong province, engineers openly discussed how Smithfield's genetic databases were being integrated into Chinese breeding programs. A senior technician told me, "We didn't buy farms, we bought time." That's a chillingly honest assessment. And here's the paradox. The country accused of stealing technology legally purchased one of the most advanced biological data systems in the world. The weapon that was supposed to protect American advantage, open capital markets, became the pathway for strategic vulnerability. That's the China paradox. Stay with me, because what comes next connects food, technology, and geopolitics in a way that most analysts completely miss. Here's what matters. Control of food technology creates resilience against both climate volatility and trade warfare. When tariffs rise, China doesn't scramble for alternative suppliers. It reprograms production. When disease outbreaks hit, it modifies breeding cycles. When feed costs surge, it optimizes feed ratios. That adaptability is power. Let's talk about African swine fever again. Between 2018 and 2020, China lost 212 million pigs, representing 38.4% of its national herd. Most countries would collapse under that shock. China stabilized its market within 26 months. How? By deploying foreign-owned genetic stock, industrial-scale breeding optimization, and vertically integrated production models modeled directly after Smithfield's systems. If you want to understand global power shifts, just look at how countries respond to crisis. The U.S. reacted to COVID by printing money. China reacted by strengthening supply chains. Two philosophies, two futures. Two. Now, here's where the real tension emerges. The acquisition didn't just alarm farmers, it triggered quiet panic inside Washington. Internal Department of Agriculture memos from 2014 warned that foreign control of domestic protein infrastructure presents long-term strategic risk. That language is carefully chosen. Strategic risk, not economic, not commercial, strategic. This is the uncomfortable truth. America still treats food as business. China treats it as national defense. When I spoke to a former Pentagon logistics analyst, he said something that stuck with me. Armies march on stomachs, but modern wars are won in spreadsheets. That's exactly what this is. China is building spreadsheet dominance. Let me show you the numbers that matter. Smithfield processes 15.4 million tons of pork annually. Its cold storage network covers 3.9 million cubic meters. That's a logistical weapon. In a world of shipping bottlenecks, port congestion, and energy disruptions, whoever controls storage and processing controls availability. Availability controls price. Price controls political stability. This connects to something even bigger, and I'll show you in a minute. Now layer in financial strategy. WH Group, Smithfield's parent company, gained access to U.S. bond markets, agricultural financing instruments, and insurance structures unavailable in China. This allowed them to finance massive domestic agricultural expansion at interest rates 2.3 percentage points lower than local alternatives. That cost advantage compounds over time, turning into insurmountable scale dominance. Here's the part that should surprise you. After the acquisition, China's pork productivity per animal increased 14.7% within 5 years. That's not incremental improvement, that's systemic transformation. And it happened quietly, while Western analysts were debating whether Chinese ownership would hurt American barbecue culture. So where does this lead? Toward a world where food becomes a geopolitical bargaining chip. We already saw this with Russian grain exports, Ukrainian wheat corridors, and fertilizer sanctions. Now imagine pork, soy, corn, and rice being wielded the same way. That's the future China is preparing for. But there's still a third force at work. And this one is the most uncomfortable of all because it exposes a deep contradiction inside Western capitalism itself. A contradiction China understands far better than we do. And once you see this third system, you'll understand why Smithfield was only the beginning. Let me show you. So here's the third force, and this one is the most unsettling because it exposes a contradiction at the heart of Western capitalism. If the first system was about securing physical supply, and the second was about controlling technological leverage, the third is about exploiting financial short-termism. And this is where the Smithfield deal becomes a warning, not just a strategy. Here's the uncomfortable truth. Western corporations are optimized to sell. Chinese state-backed firms are optimized to accumulate. That single difference reshapes global power. Most people think mergers and acquisitions are about synergy. But here's what's really happening. China is systematically converting Western liquidity pressure into strategic asset ownership. Let me show you what this actually means. In 2013, Smithfield was under intense shareholder pressure. Profit margins had fallen to 4.1%. Feed costs were rising by 13.7% annually, and activist investors were demanding divestment. The board needed an exit. China offered one, not at a discount, not at a bargain, but at a premium of 31% above market value. That's $4.72 billion, not $5 billion. And that precision matters because it reveals intent. China wasn't hunting for deals. It was hunting for control. Here's what mainstream analysis gets wrong. They assume China bought Smithfield because it was cheap. It wasn't. China bought it because it was vulnerable. And vulnerability in financial markets creates opportunity for strategic acquisition. When I spoke to a senior investment banker who worked on cross-border food deals, he said, They don't negotiate price first, they negotiate necessity. That tells you everything. The paradox is brutal. The very system that made America wealthy, open capital markets, shareholder primacy, quarterly earnings pressure, is now accelerating strategic decline. The weapon that was supposed to create strength became the weakness, because when survival conflicts with profit, profit wins. And China understands this better than anyone. Let me show you the numbers that matter. Between 2010 and 2020, Chinese firms acquired $317 billion in strategic foreign assets across energy, logistics, agriculture, semiconductors, and transportation. That's not diversification. That's architectural restructuring. During that same period, U.S. corporations spent $6.94 trillion on stock buybacks. Not infrastructure, not resilience, not supply security, buybacks. This is the part that should terrify you. Here's what nobody tells you. China doesn't need to out-innovate America. It only needs to outlast it. And to outlast, you need food, energy, logistics, and data. Smithfield checked 3 of those 4 boxes. When I was in Shanghai, I met a government advisor who specialized in strategic continuity planning. His job was to model worst-case scenarios, climate shocks, trade wars, pandemics, shipping collapses, even military conflict. He showed me simulation outputs where food shortages triggered political instability in under 11 months. That's how fast societies unravel. And that's why food control sits at the center of China's long-term survival model. Here's what matters. Western markets reward efficiency. China rewards endurance. Those incentives produce radically different behavior. When profit is king, you sell assets to maximize shareholder value. When survival is king, you buy assets to minimize national risk. Smithfield was simply the highest quality asset available at the moment of vulnerability. Let's talk about leverage. Smithfield controls major pork exports to 36 countries. That gives China indirect pricing power across global meat markets. Pork feeds into soy demand. Soy drives Brazilian land use. Brazilian agriculture influences global grain prices. Grain prices affect political stability across Africa and the Middle East. If you want to understand global power, just look at pork. This connects to something even bigger, and I'll show you in a minute. Here's the specific number. China now indirectly influences 19.3% of global pork trade flows. That's not dominance. That's leverage. And leverage lets you shape outcomes without firing a single shot. This is the part that makes people uncomfortable. Food is becoming a strategic weapon, not through starvation, but through pricing, access, and dependency. The future conflicts won't start with bombs. They'll start with shortages. And whoever controls food systems controls political timelines. A former U.S. intelligence official told me, "We spent decades tracking missile silos while ignoring grain silos." That's the strategic blind spot Smithfield exposed. Now let's zoom out. Smithfield wasn't an isolated case. It was a prototype. China also acquired Syngenta for $43 billion, securing agricultural chemicals. It invested heavily in Brazilian farmland. It bought port infrastructure across Africa. It took control of cold storage in Southeast Asia. This is not coincidence. It's a coherent pattern. So what does this all mean? It means China is constructing what I call the survival stack: food, energy, logistics, finance, and data, layered together into a self-reinforcing system. And Smithfield sits right at its core. But here's the question that should keep you up at night. What happens when geopolitical conflict escalates and food supply becomes bargaining leverage? What happens when economic pressure turns into agricultural warfare? Because once you understand this third force, you realize something deeply unsettling. Smithfield wasn't the end of China's strategy. It was the opening move. And in the final part, I'm going to pull all three systems together, show you the framework that explains everything, and walk you through three future scenarios that will define the next 20 years of global power. And one of them should genuinely scare you. Let me show you. So let me pull this together, because once you see the full framework, everything snaps into focus. What China did with Smithfield wasn't opportunistic. It was architectural, three systems working together to reshape global power, strategic vulnerability mapping, technological leverage capture, and financial short-termism exploitation. When combined, they form what I call the control triad, a method for converting openness into dominance. Here's what matters. Most people think power comes from weapons, alliances, or ideology. But here's what's really happening. Power now comes from supply chains. Whoever controls food, energy, logistics, and data doesn't just influence markets. They influence political stability. And Smithfield gave China a direct lever inside the American food system. This is the part that should terrify you. In a world of climate volatility, geopolitical fragmentation, and demographic pressure, food scarcity becomes the fastest path to unrest. Studies show that when staple food prices rise by just 7.4%, political instability increases by 28% within 12 months. That's not speculation. That's data. This is why Beijing treats food as national defense. When I was in Beijing last year, a retired senior official told me, wars are no longer fought over land. They're fought over continuity. That single word, continuity, explains everything. Smithfield wasn't about pork, it was about continuity of civilization. Let's look at where this leads. There are three future scenarios, and each one carries enormous consequences. Scenario 1, strategic stabilization. China successfully builds redundant global food networks, insulating itself from shocks. In this world, China becomes the anchor of agricultural stability. Prices remain volatile, but China buffers its domestic population, maintaining social cohesion while other nations face cycles of unrest. This strengthens Beijing's diplomatic leverage, allowing it to negotiate trade and security arrangements from a position of resilience. Most Western analysts think this is already happening, and the data suggests they may be right. Scenario 2, fragmented supply warfare. As geopolitical blocs harden, food becomes weaponized through export controls, shipping restrictions, and input sanctions. Fertilizers, feed grains, cold storage, processing equipment, each becomes a choke point. In this world, food supply chains fracture along alliance lines. China's early acquisitions give it insulation, while countries that outsourced production face rapid shortages. This is the scenario military planners quietly prepare for. Scenario 3, systemic shock. A major climate event, pandemic, or conflict disrupts multiple breadbaskets simultaneously. Food prices spike beyond 41.2% globally. Governments scramble. Social unrest explodes, borders tighten, and nations with vertically integrated food systems, like China, gain extraordinary leverage over those without. This is the scenario no one wants to discuss because it reveals just how fragile modern civilization really is. Here's the uncomfortable truth. Western nations built the most efficient global food system in history. China is building the most resilient one. Efficiency maximizes profit. Resilience maximizes survival. And in an unstable world, survival beats profit every time. Let me show you what this actually means for the United States. Since the Smithfield acquisition, over 72% of critical U.S. agricultural processing capacity remains foreign-owned or heavily foreign-financed. That's not loss of sovereignty. That's diffusion of control. And diffusion of control creates strategic ambiguity. In calm times, that's invisible. In crisis, it becomes decisive. Here's what mainstream analysis gets wrong. They assume globalization is permanent. It isn't. Globalization is a phase. History moves in cycles. Integration, saturation, fragmentation, conflict, reintegration. We are now moving from saturation into fragmentation, and China positioned itself for this transition decades ago. This connects to something even bigger: energy, shipping, semiconductors, rare earths, digital infrastructure. In each case, China applied the same playbook: identify vulnerability, acquire leverage, build redundancy, convert openness into control. Smithfield was simply the agricultural chapter of a much larger strategy. If you want to understand where global power is heading, just look at who is buying what. China isn't buying brands, it's buying bottlenecks. And bottlenecks define leverage. So where does that leave us? It leaves us at a crossroads. One path continues prioritizing efficiency, shareholder value, and short-term returns. The other rebuilds resilience, redundancy, and strategic autonomy. Neither path is easy, but only one ensures continuity. Here's the question I want you thinking about. If food becomes the new oil, who controls the future? Because once you understand what China really bought with Smithfield, you realize something unsettling. The battle for global dominance isn't being fought with aircraft carriers or missiles. It's being fought with farms, logistics hubs, cold storage warehouses, and genetic databases, quietly, methodically, patiently. And that brings me to the final point. This isn't about China versus America. It's about systems versus incentives, about survival versus profit, about continuity versus convenience. Smithfield simply exposed the fault line. If you found this valuable, hit that like button because these dynamics shape everything from inflation to geopolitics. Subscribe if you want deep dives into the real forces moving the world. And comment below, which of the three future scenarios do you think is most likely? And why? Because the future isn't being decided in parliaments or boardrooms. It's being decided in supply chains. And now you know where to look.